My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people make friends. I'm just trying to make some money. My job is not just to entertain, but also to explain it all. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. So let me get this. Two world leaders speak on the phone for 90 minutes, and tech buyers cheer the results, even though we don't even know what they are. Have relations between China and the United States gotten so strained that the mere act of a phone call gives the bulls something to celebrate? That's certainly how it felt at, particularly at the opening, before this market took a serious turn for the worse. Dow losing 272 points, S&P declining 0.77%, and the Nasdaq sinking 0.87%. Apple having a lot to do with that. Even after the late afternoon downdrift, most tech hardware stocks managed to hold up, as this industry has been collateral damage in the superpower tussle between the U.S. and China. Nearly the whole group blossomed, except for Apple. Me, I remain skeptical of any sort of détente here. Every time we've gotten optimistic, and many people do, about better relations with China since President Trump, we've been disappointed every time. A lot of people thought that when Biden got in, it would change. I don't see any way to reconcile, especially with the Chinese government embracing old-school authoritarian communism. However, that doesn't mean the situation can't momentarily improve. If we can simply take the possibility of a step-up in tensions over Taiwan, the real worry, off the table, then you get major relief in the semiconductor industry. Maybe that's what was happening this morning, which is very much hostage to the Taiwan Semi Corporation. This is a big chip manufacturer on an island that's run by a fragile government that's nevertheless fiercely hostile to the People's Republic of China. The semis were the leaders of the rotation by committee that seems to take place every single day during this downturn. And remember, it also leaves behind a lot of other prominent groups. But that's September for you. That's why I keep telling you this. Do these Chinese good feelings rallies have staying power? Who knows? We didn't hear about a follow-up meeting. We didn't hear about any new commerce. We didn't hear about anything. We didn't even see much of a rally in the so-called China stocks, with Boeing, the principal beneficiary of any camaraderie between our two nations, actually down more than $3. China needs planes. Boeing has plenty of them. Judging by the stock judging by how the stock's doing, let's just say, no dice. All right, on Monday, we'll see if this morning's tech rally can expand beyond the hardware into all aspects of tech, including FANG. I like that, Tang. My mom used to make that. I guess we probably weren't doing well. You know, Tang is bad. It's nasty. Anyway, I fear that September just won't release its bearish grip on the stock narrative that easily. There are a lot of people who think it will. I don't. Now, witness the sudden downturn and hard downturn in the stock of Apple when a federal judge ruled that they must allow external links from their app store, links that let you buy their apps somewhere else. Now, that's a real blow at Apple's profitability, as the app store margins are huge. But Epic, the video game company on the other side of the lawsuit, wanted to reclaim more autonomy and keep more of its revenue, and the judge ruled in their favor, mostly. It's a complicated decision. Some people have been saying that it's not that bad. It's full of ambiguities. The judge explicitly says Apple's not a monopoly. That's a win for Apple. But she also ruled that they're violating California's unfair competition law. Big loss. I have no idea whether this ruling will hold up. It's been a long time since I was in law school. What matters, though, is that this negative news was not baked into the stock coming in this morning, which had been ripping over the last few weeks until today. I think it is going to shave some earnings off of Apple, and it gives more ammo to the analysts who've been bearish on the stock for ages. That said, yes, this is going to surprise you. But while you could try to trade it, I think it's going to be a loser to trade. I still think you should own it. Now, I don't love the ruling, though. Nobody's putting a gun to your head, though, and making you use Apple's ecosystem. I want to say it's bad for business, but really it's bad for Apple and good for third-party developers that want to make money selling apps. So you're going to be looking for number cuts in the out years, even perhaps from the bulls. And that's something that this stock, even if today's dramatic 5-point decline, can really afford. Monday could also bring the beginning of a serious backlash against President Biden's actions this week to try to get more people vaccinated in this country. Higher fines for no masks, OSHA enforcement, forcing federal employees to get their shots or get tested every week. I am totally on board with this stuff, as you know. We need to wipe this thing out, even if it requires a little coercion. But the anti-vaxxers and the leaders in Washington will whine about how this is a violation of their civil liberties. Never mind that we've had vaccine mandates for a century. I never heard about violations of civil liberties before. Away from politics and the legal system, it's going to be a pretty quiet week. Monday, Palo Alto Networks hosts an analyst meeting. I think this longtime Cramer fave cybersecurity firm will roll out some new products that will help them keep taking market share. Remember, cybersecurity is one of my favorite themes for this moment, along with financial empowerment via technology, as exhibited by the dramatic run in the stock of a firm today. That's the king of buy now, pay later. This stock was up 31 points or 34%. CEO Max Levchin explained the story to us just last night. And while the move today seemed exaggerated, you know that a firm has now joined Square and PayPal in the pantheon of financial tech. Has Zoom Video been overly punished in its inability to dramatically raise numbers when it reported last week? I think they'll make a really compelling case to own the stock at what's known as their Zoomtopia conference. All virtual this year makes sense given their business, right? Zoom needs to show us it can grow aggressively with new products and acquisitions. Without that, I'm going to tell you, I think the stock may even give back its gains that it's had in the last couple of days. After the close Monday, Unsung Warrior Oracle reports, and this stock has really had one of the most amazing rallies in the entire market. It's up nearly 40% this year. That's soaring much faster than its growth rate. Now, that might not matter, though. It's got a halo after years of being in the doghouse. The halo comes from its inexpensive nature versus its incredibly expensive colleagues. Did you know that Crocs, that quirky shoe company, has seen its stock jump 130% this year? 130%. Pretty extraordinary. But it's consistently beaten the numbers. Why? How about we find out when the company hosts an analyst meeting? This is a very unknown company, believe it or not. I think it's going to be well attended and cause earnings estimates to be bumped on the next day. You know what? I think the same thing was going to be happening with Cisco after its analyst meeting Wednesday. A Morgan Stanley analyst just downgraded the stock yesterday. Don't you think that's gutsy, given that excellent set of orders when it last reported? I bet the bulls win this battle. I don't want to be that downgrading analyst at the end of this day. Yom Kippur, the Jewish Day of Atonement, falls on Thursday. That is traditionally a day where companies and analysts are loath to do anything major. But the federal government releases retail sales numbers, and if they're weak, you know what? You can go blame COVID and buy some stock of Amazon. That's always the default stock to buy, right, when brick-and-mortar stores show weakness. How about forward retail sales? For that, I look at University of Michigan sentiment numbers that come out Friday. Have people grown more pessimistic because of the resurgence of the virus? Let's parse the numbers. Finally, maybe because my wife Lisa and I have finally found one program we both like, Apple TV Plus's Ted Lasso, I'm going to listen in on the Manchester United conference call. I believe that soccer, or football as they call it over there, could be experiencing resurgence of interest globally, and we lack ways to invest in it. There's no better way to own a piece of the Premier League's premier team, Man U, especially after they just re-signed superstar Cristiano Ronaldo. The bottom line, given the nature of September, you have to expect next week to feel less like this morning's decent action and more like the ugly sell-off of this afternoon, even as there may be some individual bright spots. Yep, I don't want to be a downer here, but as I keep saying, I need you to expect some brutal days ahead, and don't get sucked into those morning rallies. Let's go to Les in Oregon. Les.
Hi, how are you? I appreciate you providing a masterclass in market analysis, and I really enjoy that.
You're very kind. I hope the air's getting better there. I know it's been very tough to breathe.
Yes, it is. I do have I know this time is of the essence, so I have a question about Ford.
Sure.
They're closing 2 assembly plants in India. They're taking a 1.7 net billion write-off. How's this going to impact their going forward earnings?
The stock went down on it. Les, the stock went down on it. It should have gone up on it. Why? Because they've lost $2 billion in the last 5 years at Ford. $2 billion. It's the last part of the world that they're losing money. That means that the numbers in 2022 should go up. But no, the street didn't get it. They're wrong. Les, you and I are right. Next week may bring some individual bright spots, but on the whole, remember, it's September. You got to expect ugliness. I'm not going to stop with this theme until we get to the first 2 weeks of October, and then I'm going to continue it again. On Mad Money tonight, RH reported second quarter results this week, giving you a fresh top and bottom line beat. So what does the fashion-forward furniture retailer plan to continue to dominate the home decor space? And believe me, I think it's going to. I'm getting the latest from the CEO, whom you know I am quite fond of and think is very good. Then September is known for being a tough month for stocks. But do the technicians back up this theory? I'm going to go off the charts, help you navigate this thing. And from cables to processors and, of course, semiconductors, Avnet is supporting the tech world one piece at a time. But after a post-earnings slump, are investors getting a buying opportunity in the arms dealer to the connected world? Wow. What does this shortfall in chips and supply chain problems mean for you? I'm getting the latest from the company's top brass. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.